What is up, investors, and welcome back to the Investors Club, where we talk all things investing and personal finance. Today, we're going to talk about a beginner's guide to start investing in 2020. But before we start, be sure to hit that like button and subscribe and help this channel grow. So, if you're on this video, I'm assuming that you're just beginning your investing journey, so congratulations on that first step. Now, I myself just started investing in March of this year after the pandemic dropped the markets by nearly 50%. So these are some things I wish I had known when I first started investing. I'm going to give you a few tips that might help you out as you start to get your toes wet in the stock market. Okay, number one, first and foremost, be sure you have a good cash amount piled up before you start investing. For example, if you want to invest $5,000, be sure to have an extra $3,000 to $5,000 in your savings account for a backup. You want to do this to make sure you have a safety net to fall back on. If you stick all your money in the stock market and an emergency comes up, you will either have to sell off all your stocks or borrow money, and we can just avoid that with some cash backed up to pay for those emergencies. All right, the next tip I would give is to check into your job's retirement opportunities. If your employer does a 401k match, get in contact with that department and start maxing out those contributions to receive that match. A lot of employers will match up to a certain threshold, and you want to take advantage of this because that's free money. And who doesn't like a little bit of free money? However, if your employer does not do a 401k match, I would recommend checking into setting up a Roth IRA. A quick rundown on what a Roth is that it's a retirement account like a 401k. However, it has certain tax advantages that differ from a 401k. A Roth is designed so that you contribute after-tax income into this account. And since you've already been taxed on that money, you will not be taxed on it again when you go to take it out. For instance, if you end up having a Roth worth $1 million when you get to retirement age, when you take that money out, you receive that $1 million. There's no tax deductions, just some cold hard cash, baby. The max contributions to a Roth IRA is $6,000 a year, which is $500 a month. So I think $500 a month is easy to obtain when you're just starting. My advice would be to buy a low-cost S&P 500 index fund like VOO or IVV to start out. These will give you some more understandings when you're first entering the stock market. These funds hold wide ranges of stocks, so it fully diversifies you right off the bat. So be sure to check into that. That's just a quick touch-up on what a Roth is. So to get more information, do some more research. You can just go on Google, type in Roth IRA, and it will give you a lot more information than I'm giving you here. Now, if you want to set up a Roth, you can do this through a broker with an advisor and pay some commission. Or you can go to a website like Vanguard and set up your own. I personally have an advisor through Ameriprise Financial, but if you want to manage your own, you can set one up yourself on some other brokerages. If I could do it all over again, I probably would open an account like on Vanguard where I could manage it myself just to save myself those commission fees. But if you do this, just be sure to do your own research when you open that account. Next, if you want to set up your own cash account and buy individual stocks on your own, I personally use Robinhood, but there are others like M1 Finance and TD Ameritrade that are easy to set up and start investing. Now, if you decide to buy your own individual stocks, my advice would be to always do your research. A lot of people will buy companies just for the fact that they like them. Always remember you are buying a share in a company, and that share price is going to reflect how good or bad that company is doing. The biggest thing that has helped me pick out my stocks is that I will look at financial statements of each company. Financial statements are easy to find. You can just type into Google the company you're looking at and type, say, Apple's financial statement, and you should be able to find it. Learning how to read a financial statement is a bit more difficult, but if you just YouTube how to read a financial statement and watch those videos, over time you'll get the hang of it and be able to understand what's going on. Now, I want to talk a little bit about day trading. Don't do it. Do not put yourself through the stress and heartache of this method. I know that's what a lot of people start off by trying to day trade. I did it myself. I thought, you know what, look at all these people making so much money. Probably 9 times out of 10, those people that claim to make so much money per day or so much percentage a day are garbage. They're probably lying, and they want to take you down the same rabbit hole that they got themselves into. 80% of people who day trade lose money, and I swear the other 20% probably just lose their minds because it is seriously so stressful. Especially if you have a job, there's really no way to do it unless you're doing it full time and watching the market constantly all day long. If you want to know more about the disadvantages of day trading, I have another video called What Not to Do When You Start Investing, and I dive a little deeper into that topic. Some other things like the taxes on day trading compared to long term investing, and so on and so forth. So if you want to check that out, be sure to go to the channel and check it out. I just wanted to touch on that quickly in this video as well. So that is just some quick tips for beginners getting in the stock market in 2020. Again, I'm a beginner myself, but these are some things that I've learned along my few months of investing. As always, guys, go ahead and like and subscribe if you like this content, and I really appreciate you guys watching. Have a good one.